If you're single, no kids, no mortgage, no dependents, why would you need life insurance? It's a completely reasonable question, and the honest answer is probably not for the reason insurance salespeople give you. But there are real, legitimate cases where single people, including young people in their 20s, genuinely benefit from life insurance. And there's one overlooked reason that almost nobody talks about. Today, we sort through the noise. This is Policywise, insurance explained honestly. Let's start with the honest baseline. Life insurance exists to replace the financial loss caused by your death, primarily for people who depend on you financially. If none of the following apply to you, the case for buying life insurance right now is relatively weak. You have no dependents, no children, no partner who relies on your income, no aging parents or siblings who count on your financial support. You have no co-signed debt. If you have student loans in your name only, those typically die with you in most countries. Your estate might be pursued, but co-signers who didn't sign the loan aren't stuck with it. However, if someone co-signed your loans, a parent, grandparent, or anyone else, they are legally responsible for that debt if you die. Private student loans, unlike most federal ones, do not automatically discharge at death in all cases, and even when they do, the process is rarely instantaneous. A modest term life policy can mean the difference between your cosigner losing tens of thousands of dollars or not. This affects millions of people who graduated with private loan debt. Case 2. You have family members who depend on you even though you don't have your own children. Maybe you send money to parents each month. Maybe you're informally supporting a sibling with a disability. Maybe an aging grandparent counts on your help. Your death doesn't just affect a nuclear family, it affects everyone in your orbit who relies on your income or labor. Case 3. You co-own a business. Even single people with no family dependents can have business partners who depend on their contribution. A buy-sell agreement funded by life insurance is a real planning tool here. It lets partners buy out a deceased partner's share instead of having the business fall into a chaotic estate. Case 4, and this is the one nobody talks about, buying now to lock in your health rating. Life insurance is priced on your current health. Right now, if you're in your mid-20s and healthy, you are the cheapest version of yourself to ensure that you will ever be. A 25-year-old non-smoker in good health might be quoted rates that feel almost laughably small for a significant amount of coverage. What happens in 5 years? You might be in exactly the same health. You might not. High blood pressure, diabetes, anxiety or depression diagnosis, sleep apnea. These things happen to people in their 20s and 30s with no warning, and they permanently change your risk classification and your premium rates, or in some cases make getting coverage harder. Buying a 30-year term policy at 24 means you'll be covered at your cheapest possible rate for the next 3 decades. Even if you never need the death benefit paid, you had inexpensive protection during the years when your life circumstances might shift significantly. Here's the version of this conversation you might hear from a salesperson with the translation. Pitch: you should buy whole life now while you're young and healthy because the cash value will grow for decades. Translation: I earn a very high commission on whole life, and your young and healthy status makes you an attractive customer. The legitimate reason for a single person to buy insurance young, locking in a favorable rate on term life, does not require buying whole life. A 20 or 30-year term policy at low premiums gives you the rate-locking benefit without the fees, without the complexity, and for a fraction of the monthly cost. If someone is pushing whole life on a single 24-year-old with no dependents, ask them to clearly explain how the situation fits one of the 3 legitimate whole life use cases from our last episode. "You'll thank me later" is not an answer. Here's a useful reframe. Even if you don't need life insurance right now, your life is probably going to change. Marriage, kids, a mortgage, a business, parents who age. At some point in the next 10 to 20 years, the odds are high that you will have dependents and you will need coverage. The question is, do you buy then, at whatever your health is at 37, or do you buy now at 24 and lock in?
For a lot of people, the math favors buying a modest term policy now, keeping the monthly costs small, and having coverage in place before life gets complicated. If you're in your 20s and single, the rate locking argument applies directly to you. You don't need $1 million policy. Even a small term policy started now is cheaper than you think. If you have co-signed student loans, check who co-signed and whether a small policy would cover that balance. It's not expensive, and it protects the person who trusted you. If you support family members financially, even informally, even monthly Venmo payments to a parent, that's a financial dependency that life insurance can protect. If you're about to get married or have kids, you're about to be in the target audience for life insurance. Starting now, before the health unknowns of your 30s, is almost always cheaper. The honest answer, if you're truly single, no dependents, no co-signed debt, and renting, there's no urgent need. But if you have co-signed loans, financially dependent family, a business partner, or if you simply want to lock in your best ever health rate for a modest term policy, there's a real and defensible case. The pitch to avoid: anyone pushing whole life on a young single person without a clear explanation of why.
Next episode, we shift to health insurance, specifically for anyone approaching retirement age. Medicare Advantage versus Medigap. Two very different paths, very different costs, and picking the wrong one can cost you significantly over the years. That breakdown is coming up. Subscribe for one honest insurance breakdown every week. This is Policywise. General education only, not financial advice. Talk to a licensed professional before you buy.